Hello students, welcome to the accounts class. This is the second of a two-part video in which you will learn how to prepare the trading and profit and loss account at the end of an accounting period. I hope you have your pen and paper ready. By the end of this class, you will be able to calculate the cost of goods available for sale, the cost of sales, gross profit, and net profit. And you will prepare a trading and profit and loss account from a given trial balance using the horizontal format and the vertical format. Let us continue from where we left off. We're looking at an example, an exercise taken from your textbook, The Principles of Accounts, yes. It says, from the following details, draw up J. Grant's trading account for the year ended 31 December 2007. And you're given some balances. Now let's make it a little more interesting. Let us show our calculations for the cost of goods sold, gross profit, and net profit for the period. All right, so following from what we learned earlier, net profit is equal to purchases plus carriage inwards minus returns outwards. Now let's find those values. Purchases was $26,409. Carriage inwards was $670, and returns outwards was $495. Okay, so you're going to get a net purchases of $26,584 by doing those additions and subtraction. All right, adding your purchases to your carriage inwards and subtracting the returns outwards give you net purchases of $26,584. Now, we can use that net purchases figure in our calculation of cost of goods available for sale, because cost of goods available for sale is equal to opening stock plus net purchases. We have already calculated net purchases, so let's add the opening stock to that. The opening stock was the stock on the 1st of January 2007. That was $6,924. So when you add that to the net purchases, you get your cost of goods available for sale of $33,508. Now, the cost of goods sold is the cost of goods you have available for sale minus your closing stock. All right, we just calculated the cost of goods available for sale, and your closing stock is $7,489. So when you take your closing stock from the cost of goods available for sale, you're left with cost of goods sold of $26,019. Net sales. Net sales is equal to sales minus returns inwards. Now your sales was $38,742, and your returns inwards was $490. When you subtract the returns inwards from your sales, you get net sales of $37,852. Now gross profit is equal to net sales minus cost of goods sold, and we had calculated those figures. Net sales of $37,852 minus cost of sales of $26,019 give you gross profit of $11,833. Now, let's go ahead and do J. Grant's trading account for the year ended 31 December 2007. Okay, so here are our calculations, and let's compare it with our trading account. That's what they asked for. They did not ask for the profit and loss account, just the trading account. Okay, so the opening stock, remember how we calculated our net purchases and all of that? Okay, now to calculate net purchases, you're going to use this inside column to make the adjustments to purchases so you can arrive at your net purchases. And then you're going to add, remember how we added net purchases to opening stock to get the cost of goods available for sale? Okay, so let's present our trading account. We start with opening stock, and we use this second column for this. We use the first column to make adjustments to purchases. So next, purchases, add carriage inwards, minus returns outwards, give you your net purchases. Okay, notice we use brackets when we are subtracting in accounts. Instead of a minus sign, we use brackets. Okay, so there's our net purchases, and it does agree with what we had done before. Now our cost of goods available for sale is arrived at by adding our net purchases to our opening stock. There it is, cost of goods available for sale, $33,508, and it agrees with what we had done before. When we take our closing stock from the goods available for sale, we end up with the cost of goods sold. Okay, and that agrees with what we had done before. To arrive at our gross profit, we're going to take the cost of goods sold from our net sales. Our net sales, here it is on the credit side, and we're taking the return to arrive at net sales. Right? Now what we do here, this is the horizontal style with debit side and credit side. On the credit side, we have a total of $37,852, and on the debit side, we have a total of $26,019. Now the difference between the two sides is $11,833. That is our not our balance carried down, but our gross profit that will be transferred to the profit and loss account. And what do we have when we did our what did we have? Our net sales minus cost of sales equals gross profit. So you see how it corresponds with our what we're showing in our trading account. Now let us look at the vertical style of presentation for those same transactions for J Grant. All right, so it's not a trading and profit and loss, it's just the trading account we are doing. Remember that. So we could have taken this out. It's not trading and profit and loss account. So just let's say it's trading account for the year ended 31 March 2007. So with the vertical style, we're starting with sales. We're taking out the returns inwards to arrive at our net sales, and we keep that in the outside column so it will be easy for us to subtract our cost of sales from it with nothing coming in between. Okay? Now, let us calculate our cost of sales. We're starting with opening stock, and we're going to add net purchases to that. How do we arrive at net purchases? We're going to use the first column to make our adjustments to the purchases so we can arrive at net purchases. So to our purchases, we're going to add the carriage inwards to get $27,079. and then we're going to subtract. We're going to take out the returns outwards. That gives us our net purchases. Now when we add our net purchases to the opening stock, we end up with the cost of goods available for sale. Now we did not sell all of the stock. We had some left over at the end of the period. That's our closing stock. We'll have to subtract our closing stock from the goods that were available for sale because they were not sold. Can't include it in the cost of goods sold. And when we do that, we get cost of sales, cost of goods sold, same thing, of $26,019. Now when we take our cost of goods sold from our net sales, we end up with gross profit of $11,833. Okay, just like our calculation showed us. Okay, now let's do another example. So that was our, let's do another example. Now this time we're given a trial balance. The example says, let's get it. The example says, given below is a trial balance of George Green on March 31, 2020. And here we have a list, a trial balance with a debit column and a credit column. All right. Then we have some additional information. It says that stock on March 31, 2020 was valued at $14,300. Now you notice that stock was not included in our trial balance because it was not on the books when the trial balance was done. The stock, the closing stock, was arrived at by doing a stock take on the 31st of March. Okay, so it had not yet been included in the accounts. All right, remember we did a journal entry that brought the closing stock into the books. Okay, so don't forget, don't leave it out in our calculations. We're going to need it. Now when you get a trial balance to draw up a trading and profit and loss account from, one of the first things one of the things that can help you and make you work faster and be more organized is to go down the list of items and indicate whether they would be used, whether they would be entered, or whether they would be recorded or shown in the balance sheet or the trading account or the profit and loss account. Okay, so you're going to go down the list, and if the item belongs to the trading account, you just put a T beside it. If it belongs to the profit and loss account, you can put a P beside it. And if it belongs to the balance sheet, you can put a B beside it. Okay, now let's do that. Building is an asset, so it would not be used in your trading or profit and loss account. It will be entered in your balance. It will be used in your balance sheet, so put a B beside that. Fixtures and fittings, those are assets as well. Put a B beside that for balance sheet. Office equipment will be used in the balance sheet, so put a B beside it. Stock at the 1st of April, the opening stock, this will be used in your trading account, so put a T beside it. Bank belongs to the balance sheet, so you put a B beside it. Cash belongs to the balance sheet. Debtors and creditors belong to the balance sheet. Loans belong to the balance sheet. Capital belongs to the balance sheet. Drawings belong to the balance sheet. All those I just mentioned belong to the balance sheet, except opening stock. Okay, now let's continue. Purchases. Purchases belong to the trading account. Sales belong to the trading account. So you're going to put a T beside purchases, a T beside sales. Returns inwards, returns outwards, those are trading account items, so you put a T beside them. Carriage inwards and carriage outwards, those are trading account items, so you put a carriage inwards is a trading account item, so you put a T beside it. But carriage outwards is an expense. Remember, carriage outwards is the cost of transporting goods from your business place to the customer. So that is an expense, and it will be used in your profit and loss account. So you're going to put a P beside it. Discount received, discount allowed, wages, interest on loans, commission received, repairs and maintenance, those are all expenses or revenue. Okay, let's differentiate them. So carriage outwards is an expense for the profit and loss account. Discount received is a revenue, it's an income for the profit and loss account. Discount allowed is an expense for the profit and loss account. Wages is an expense for the profit and loss account. Interest on loans is an expense for the profit and loss account. Commission received is a revenue, an income for the profit and loss account. And repairs and maintenance is an expense, profit and loss account. Now, don't forget your closing stock. Your closing stock is going to be used both in your trading account as well as your balance sheet, because remember, it is an asset. It's goods that you still have. So it's an asset, and you're going to use it. You're going to put it in your balance sheet. At the same time, it belongs to your trading account. Remember, we did a journal entry where we entered where we did a double entry where opening stock was shown in the trading account. Yes, so that's an item for the trading account. Okay, so let's go now and do the trading and profit and loss account for George Green on the 31st of March 2020. Okay, so we're going to use the vertical style of presentation. Notice your heading. Trading and profit and loss account for the year ended March 31, 2020. Okay, I should have pointed out this earlier. Students usually make the mistake of saying trading and profit and loss account as at. But these items are values that have accumulated over a period of time. Okay? So we say for the year ended. So sales, we start off with sales, and if we look in our trial balance that we're given, we see that sales was 71,500. We're going to take any returns inwards from it. Is there any returns inwards? Yes, there it is, $900. So we end up with net sales of $70,600. Then we're going to take cost of sales from that to arrive at our gross profit. To arrive at cost of sales, we're going to add your opening stock to your net purchases and to arrive at the goods available for sale, and then subtract the closing stock from it. Okay, so we start off with our opening stock. Our opening stock was 13,500. There it is. Then we're going to make some adjustment to our purchases to arrive at net purchases. So we look for our purchases. Yes, there it is. $51,150. We're going to add carriage inwards to that. Carriage inwards was $1,100. And then we're going to take out the returns outwards from it. Returns outwards, there it is, $400. And that gives us net purchases of $51,850. Now when we add the net purchases to the opening stock, we get the goods available, cost of goods available for sale of $65,350. When we take closing stock from that, we are going to be left with the cost of goods sold. Now your closing stock, remember, it would not be included in your trial balance. You'll find it underneath the trial balance as additional information. Your closing stock was 14,300. When you take closing stock from your goods available for sale, you're left with the cost of goods sold. And when you take your cost of goods sold from your net sales, you end up with your gross profit. Okay? Now we are continuing, and this part of the presentation is our profit and loss account, where we are going to find our net profit. Okay? So we add any income, any revenue, we add it to the gross profit. So there was discount received and commission received. Discount received was $680 and commission received was $1,350, a total of $2,030. Add that to your gross profit and you get $21,580. Notice we're going to subtract the expenses. Okay, now there are more than one expense, so we're going to use the second column, and so we can put the total in the outside column. Notice nothing else is in this line. Okay, it's a heading. All right, so discount allowed $400, wages $8,000, interest on loans $1,500, there it is, and repairs and maintenance $1,560, which gives you a total. Looks like we made a mistake here. How did we get our total expenses to be 2,340? Big mistake. So we left off a 1 there. So that should be it. Let's check. 6 and 8, 14, 5 and 1, 6 and 8, 14 and 5, 19 and 4, 23, 2, 3, 4 and 8, 12. 12,340 is our total expenses. And when we take the total expenses from the profit, the gross profit, we're left with 9,240 net profit. So there it is. That's your trading and profit and loss account for George Green for the year ended March 31, 2020. Okay, so we've come to the end of this session. They did ask for the balance sheet, but in our next class, we will do that part of the question. Okay, now remember that you can pause the video at any time. You can go back to those areas that were a little difficult and listen to it again. Work the questions, practice, practice, practice. Okay? All right now, bye. See you in the next class.